Good morning, everyone, and welcome to the PivotBoss Pre-Market Report for Tuesday, May 29th, 2018. I hope you all had a fantastic Memorial Day weekend. And back to the markets here, we see that the ES is currently pushing down below the multiple week lows here. We actually pushed back below 2703.75, the key level there. And at the moment, we're seeing, at least on the intraday time frame, we're seeing some compression down below that level. And if we start to push back above 2703.75 during the intraday session, that could lead to a rally back toward 2720, perhaps back up toward recent highs 2731. Again, we're coiling within this tight range here, continuing to push above and below, but we're not seeing much movement away from that level. And again, that's kind of the nature of how price tends to stay near or around these key levels at times. Using them as targets, but sometimes you can see here just kind of chopping around that zone. At some point we will get that move to one of these edges, and then it could fade it right back to that area as a target. So at the moment we're trying to see which way is this thing going to go. I've been mentioning before, given the uptrending behavior, this bottom edge is an edge for bulls to defend and look to trap and squeeze. But any failure to get back above 2703.75 could be very significant and could lead to the next drop back into 2600. So again, watching this zone very closely on an intraday time frame. Keep an eye on 2703.75 for the potential for a squeeze. Taking a look at the NQ, this one remains in an uptrending type of structure here overall. Pullbacks have been defended and squeezed, and so we're seeing more of the same right now. We're seeing this thing pull back, we're seeing the uptrend remain intact. This spot right here in the trigger zone has been defended overall, and so in this case we're keeping an eye here on 69.40. Popping back above 69.40 could go a long way toward getting this thing going back toward recent highs. And if you start to see a break through these 2-3 week highs, this thing could open up clear air into the next target above, which is going to be 7,200. So this thing is still on the verge of a squeeze, or at least a breakout in one direction or another, but we continue to hold within this compression, so holding off for the potential for a breakout one way or another. So continue to watch the NQ very closely. Crude oil. Now crude oil may be actionable today, tomorrow. It was actionable yesterday. This one right here had a major impulse sell-off. This thing really picked up. You never know it's really going to be an impulse sell-off until support comes out and this thing just starts screaming downward. We knew it was likely an impulse leg that was happening, and when that begins to occur, what we're looking for is for a strong low to develop. A strong low, and you can see I've already pulled up the impulse sell-off wave from that high, which is 72.90, sold off to this low, which is 65.80, and now we're bouncing back above the mid, trading 66.90. Yesterday this price was hanging out a little bit lower, around 47, 66.47, but it still looked like it was a bottom in the making. Now if this is going to be a bottom, one of my favorite trades is trading back to this midpoint. That's 69.35. So if today closes above 67s, above that midpoint, and looks bullish, we could be on our way to 69.35 somewhere in the next 3 to 5 days, maybe 5 to 7, but usually that target is hit rather quickly. You get an impulse sell-off, you bounce it right back. That's a high probability move. From there we may actually see some development within the inner 25s, or we can take the whole range to do business. So right now that impulse leg is creating a new key range that's very similar to this one, where it bounced right back to our 62s very quickly, and then from there started to chop. This is the same type of behavior that could happen now. So a couple of ways that I was looking at engaging this one right here is perhaps using a call debit spread. So that could be one where you're looking at 67 to 69, somewhere in there, or 67.5 to 69.5. The other thing could be an in the money long call, so a delta of say 70 or better. That could be somewhere around 65 right now, and again that could be a little bit more expensive there, but at the same time this thing, if it starts to push to that 69.50 like we would expect, would get a really good move, and the value would improve in that from that perspective. So that would be very nice to get back to 69.35. Again, this could be several days in the making. Today needs to close above 67. From there, perhaps we could be looking at midpoint retests, a midpoint at 66.68. We could be looking at rotations to the absorption zone. On the intraday time frame, the absorption zone is 66.30. So any rotation to 66.30 has been defended so far for a push higher. So those are the things we're looking for. Any failure to hold 66.30 or 66.20 starts to open up some downside. So we still got to make sure that this is the pivot to play off of, but right now it's looking good for a play back to 69.35 sometime over the next 5 to 7 days. Taking a look now at gold. Gold looks like it's ready for a squeeze as well. This one has had a great bounce, never came really back below the 1295s, and instead has held 1300s. Higher lows, higher highs day over day. This one appears like it is ready to trap below, or is already trapping bears below 1295 and looking to squeeze them into about 1330 to 1338, perhaps as high as that zone. So we could be looking at much more strength ahead. Again, the 1295 level is the major pivot to watch there. So if you're looking at this right here, that level coming across right here was resistance, major rejection, absorption. Here's the breakout. Now they're holding it here. So all of that looks good. Even if we were to drop down here and take out these recent 3-day lows tomorrow and hit 1295s, that could still be a great buy for a squeeze, say into 1326. So that could be about a 30 handle move from 25 to 36s if that were to play out. So right now everything looks like it's still poised for more upside. The zone where it came into 1300 to 1306, we're looking for signs of rejection, and you're just not seeing it. Remember, rejection is a market reaction to a price zone or a price area, and we're not seeing that. Instead, this is acceptance, and we've seen a trend start on the upside now. So all of this points to perhaps more upside unless bears can get price back below that 1295. Alright, that is it for now. Let's see how this plays out heading into the new week of trading. Good luck and trade well.